Hi, it's Larry Gaines from optionsontheopen.com, and it is our goal to teach you how to make consistent and impressive returns trading options every day. I just love to brag about some of the great trades that are done by our members. Last Thursday, January 27th, we reviewed Apple using our trading model, and the indicators identified Apple as being at or near the top end of its intermediate price cycle. We pay close attention to Apple since it is a market leader of the NASDAQ and makes up around 20% of this index. Our trading indicators were indicating that Apple had a high probability of making a short-term correction to the downside, making it a really good trade candidate for a short-term swing trade to the downside. The indicators showed Apple moving sideways and losing momentum. Its upside rally had been in place since the early part of the week, or actually started on Monday. And by the way, we also caught part of the upside rally with the long option swing trade. Well, anyway, the first step, trade qualification, had been met. So the second step was to construct a low-risk option strategy that would make us some quick profits on a high probability correction to the downside. One indicator that we use within the trade model is the Bollinger Bands. And as you can see, here's Apple. This started on Monday. We had this bottom here, and then we had this rally. It hung right in there with the Bollinger Band straight up. And then as you can see, it started to move sideways and created this channel. This happened on the 26th and just kind of moved sideways and got narrower and narrower. Well, when you see these sideways patterns with the price movement away from the Bollinger Band, this is a signal to watch out. There's going to be a shift in momentum. And since it had been a straight move up over 6%, the high probability of the trade was that the shift in momentum would be to the downside. So, based on this, the trade was to buy the March 340, 330 long put spread. So this was done, and by owning the puts, you would profit from a lower move. And by selling the out-of-the-money 330 puts against the long put, you could reduce the cost of capital and reduce the risk. Well, one of our members, Gville, did just this and bought the exact put spread, and what a great trade it turned out to be. The very next day, Friday, Apple opened a bit higher, right in here, and then just fell like an elevator, straight down. Gville was able to exit the spread and made over $1 per contract profit. And remember, one contract equals 100 shares, so that's over $100 per contract. And that was over 30% return on trading capital in basically less than 1 day. So if you would like to learn to trade like this and learn about options from me and be mentored about your trading, please come join us at optionsontheopen.com. That's optionsontheopen.com. And thank you for your time.